Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. Well, what do we got going on in the markets today? We're having a down day. Dow's down about 200. Nasdaq's down about 150. Okay, so what does that mean? Where are we headed? Well, I think we're headed lower, but careful. Right now, the S&P is sitting right on the 50-day. It's come down sitting right on the 50-day moving average. And this is where there's a tug of war between the bulls and the bears. Which way are they going to pull it? Now, we did drop below the 50-day. After a long run up, we dropped below the 50-day, but it didn't take. We came back above it. The bulls aren't ready to give up the fight yet, but once we drop below that 50-day again, there's a lot of air going down to about 4,000 on the S&P. We're at right now at 4460, and we're right on that 50-day. Now, my take probably is we're going to get a little bounce up from here, and then we're going to crash through that 50-day for the second time, and that'll take us down to the 4,000 level. This is just my take. You can look at the HYG, which is the junk bonds, right? The junk bonds, they're coming down. They're sitting right on that 50-day moving average also, and I think that they'll get a little bounce before it breaks through the 50-day for the second time. Once these two break through the 50-day, there's really not much to hold this market up from a technical standpoint, and I do think we'll come down to that 4,000 level relatively quickly. Just my take. We'll see how that plays out. A lot of the moon boys still thinking we're going straight up from here, record highs by the end of the year. Possible. Not my take. My take is we're going to come down. All right, let's get over to the real estate market. Now, I was reading an article by the Redfin CEO, right? Glenn Kelman. Now, he basically says that, well, people are having trouble buying homes right now. And he's saying that it's a tragedy for the buyers because of this 7.4% interest rate. A tragedy for the buyers. Now, my opinion is the only tragedy would be if someone were actually to buy at these prices. See, there's a greater fool theory. I'm sure you've all heard of that, where you buy something, you find a greater fool to sell it to. But you never want to be the greatest fool. The greatest fool buys right at the top. Now, we have the genius Billy Bob that sold right at the top, and he sold to Ray Ray. And now Ray is house poor and struggling to make all his payments while Billy Bob is on vacation in Mexico. There's a big difference between Billy Bob and Ray. But you never want to be the greatest fool, the one that buys at the exact top. And I think that's about where we are now. And the only tragedy I see is if someone were to buy here, because you're going to become what is known as a bag holder. Now, I would not be blaming the 7.5% mortgage rate for why people can't buy. I wouldn't be blaming that rate. What I would be blaming is holding rates at 0% for 14 years that has caused this massive bubble, the biggest bubble we've ever seen since 2008. We've done nothing but print money to blow the bubble up bigger. This is the largest bubble in the history of the world. Now, it's funny to me. I talk to a lot of people and I see a lot of comments. And I am saying that prices will come down in houses by about 40% from here. In most areas, we're already down 5 to 10%, but we have a lot farther to drop. The show just getting started. It's going to be a horror show. It's going to be a freak show. The show is going to bring this market down. Now, 40%. Now, people tell me, but Mike, that's impossible. That's not possible. And they always tell me who they are, in the comments. They want to tell me to let me know they're smart, right? Like Damon, he's our chief analyst, and he says that's not possible. He watched the show. If you're watching, Damon, thumbs up to you. Always like a chief analyst to give me their critique. And we got an underwriter. There's an underwriter works for U.S. Bank. Says it's impossible for prices to come down by 40%. Now, it's possible they could go up by 40%. We've just seen that, right, in the last 2 years. We just seen it 20%, over 40% in some areas. But everybody agrees that it's not possible for homes to come down by 40%. Now, I think it's possible to come down a lot more than that. Now, if you say, well, take Bitcoin, for example. Bitcoin, could it come down 50% from here? Now, if you're a Bitcoiner, you'll say that's impossible. But it already has come down 50%. It was up at 69,000. Now trading at 25,000, could be trading at 12,000 like that in the click of a day or two. Really fast. Same with the stock market. Everybody believes the stock market can come down 40 or 50%. Oh, of course, Mike, that can come down. But housing, no way. Houses cannot come down by that much. It's impossible, Mike. It's just impossible because everybody's locked in. They're locked in at 2.8%. And they got all this equity that's never, ever going to vanish. Well, I got news for you. Houses are going to come down, and they can come down even with no inventory on the marketplace. Everybody says that there's no inventory, so prices can't come down. Well, let me give you a scenario of how they can come down. Now, the banking system is in danger right now. Okay, I think we're in the midst of the greatest financial crisis that will be the greatest financial crisis of my lifetime, and probably the greatest financial crisis in the history of the world. Now, if you think the banking crisis has been resolved, please leave me a comment and let me know why you think the crisis has been resolved. We've already lost 10% of the top banks this year, and there's going to be hundreds and hundreds more going down. Banks are in trouble. They're going down. They're actually running what I would call a Ponzi scheme. They're running a Ponzi scheme right now. But Mike, you're just going off on the deep end now. They couldn't be running a Ponzi scheme. Look at most people that run a Ponzi scheme, when Bernie Madoff was running his Ponzi scheme, it didn't start off as a Ponzi scheme until he lost everybody's money, and then he created the biggest Ponzi scheme, right? A very large Ponzi scheme, and he got caught. He went to jail. Well, nobody goes to jail when the banking crisis. No one goes to jail, but they're running a Ponzi scheme. They've lost your money. Your money's gone. They don't have your deposits anymore, right? They are assets that they took your money. They put them into these assets, things like commercial real estate. They made loans on them. Those are down 50% right now. They put them in long-term bonds. Those are down about 40% right now. Your money is gone. Let's say they've lost half your money. Well, they got to get it back before they get a bank run. Now, Silicon Valley Bank already had the bank run. They got shut down. Okay, First Republic already had the bank run. They got shut down. Signature Bank already had the bank run. They got shut down. If there's a bank run at your bank's going to be shut down. Now, the FDIC, they got 1% of the money. 1 cent on every dollar is how much money they have. Okay, so they're not going to be able to bail this out quickly, right? So they're going to have to print more and more money, right? And what's that going to do? What's going to send inflation higher? Inflation's already going higher. I don't know if you know this or not, but just since June, oil prices are up 25%. Well, let me think. What's oil in? Just about everything that you buy. Cost of oil to deliver the product. Cost oil to make the product. Oil is very inflationary, and it's up 25% just since June. Just over this summer here, 25%. You think that's not going to show up in inflation numbers? Inflation numbers are going to be way up. So therefore, the Federal Reserve is not going to be able to lower rates because of the inflation running hot, running on fire, right? They want to lower the rates, but they know they cannot. They lower them, we'll get 10, 15, 20% inflation. We might even go into hyperinflation. So the rates are going to stay high. The banks are in trouble. They have to get money coming in, right? So what do they do? Well, my bank, it makes me nervous as can be. They're offering 5.5% right now. 5.5% if I'll bring them more money. Well, that makes me nervous. Anytime something's a little too good, you got to be careful. Now, what are they doing with that? Well, they go out and they try to make loans, try to make money, but what they're really doing with it is they're bringing it to Las Vegas now. That's just not literally to Las Vegas, betting red and black on the roulette wheel, but they're taking that money and they're trading with it. They're trading derivatives, and these derivatives is a quadrillion-dollar market, and if they don't get their money back quick enough, if they continue to lose money, they will go under. There'll be hundreds and hundreds of banks that go under. Now, what does this do when the banks go under? You see, they have all these, they're what's called unrealized losses, right? Now, if they had to mark these losses down right now, every bank out there would be insolvent, even the big ones, even JP Morgan, even Wells Fargo, B of A, Citibank, Goldman Sachs, but they don't have to write the assets down until they sell them. So they don't want to sell them. They want to bring in new money and try to hold on to these assets. Because if they have to sell them, that's marking it to market. The market is 50% off for those assets. They become insolvent. The Fed comes in, they shut them down, right? That's what would happen. So they don't want to do that. They want to get new money coming in to pay off the old money, right? And that's where the Ponzi scheme is. That is exactly what a Ponzi scheme is when you need new money to pay off the old depositors, because they've lost the old depositors' money. So you have a major financial crisis going on right now. There has been nothing resolved in this banking crisis that we're facing today. The biggest in probably the history of the world, definitely the biggest in my lifetime. So there's a banking crisis. Now, when there's a banking crisis, they're bringing in money. But when they don't have money because they're getting the run on the banks, do you realize $1 trillion has already left the bank? There's kind of this quiet revolution where people are going in and taking their money out of the bank. They don't trust the bank. I don't trust the banks at this point. Yes, I still have money in them, but I don't trust them, I don't trust that I'll get my money back. They're going to have what's called bail-ins. Now, you don't think that's possible, just Google bank bail-ins and it'll explain it to you. I don't have time to explain that all in this video, but instead of the government bailing them out, they're going to get bailed in with the depositors' money, with stockholder money, with the bondholder money. They're going to get bailed in, and what are they going to give you in return? They're going to give you shares in the bank, but the bank is going to be worthless. The bank is going to be going to zero. So those shares in the bank that they're going to give you for your money is worthless. But that's just a bail-in. I got a little sidetrack there. But when this crisis happens, and it's happening right now, you get a liquidity crunch. Okay, so liquidity, it freezes up. Nobody can get loans. You can't get loans for your business. You can't get loans to refinance your commercial property. You can't get loans for houses. What does that do to the housing market? It freezes it up. We're already seeing this. Mortgage applications at a 30-year low right now. We're seeing the housing freeze up. Okay, so once it freezes up and people cannot get a loan to buy a house anymore, okay, so now you got it's frozen, right? It's illiquid. You can't go sell your house. You can't just put your house on the market. Like right now, we're still in the good times. You can put your house on the market, probably get a price within 10% of what Billy Bob got, and you can get out. But pretty soon, it's going to lock up. The system's going to lock up. But Mike, there's no inventory. In my area, nobody ever sells. And that may be true. Your area only goes up. And that's perfectly fine. But most areas, what happens is someone has to sell. They get a death in the family. They get a divorce. They get a job loss. They get a job transfer. There's reasons for the sale. And when just that one person comes on, there's no liquidity, right? But they have to sell. They have to get out. They have to take any price they can get. I get these calls all the time. See, I'm a real estate broker. I answer the phone. They say, Mike, I'm divorcing my wife. Here's my house. Put it on the market. I'll take it out at whatever price goes at. Just get me out. We want to part ways. And that's called a forced sale. Forced selling going to come on. But if there's no buyers, because the buyers have left the marketplace, they've left the marketplace, and there's no inventory, but there's no buyers. Okay, so I agree. The buyers are not there. The sellers are not there. But this poor guy, he's got to sell right now. He's got to sell. And he's got to take any price that they'll give him. So someone that has all cash sitting on the sideline will come in and offer him 30, 40% less for his house. Okay, so he's your next door neighbor now. Same floor plan. Just took 40% of the price that you just bought your place at. Oh, that's got to hurt, because that's the new comp for the neighborhood. But you're sitting there going, but my house, it didn't go down. I'd never sell it that cheap. It doesn't matter. The next guy's going to sell it at that price or lower. And this is the death spiral that's circling the drain. Downward we go. The downward motion is already in play. You may not realize that. People go, but Mike, houses were flat this year. They were flat this year, but inflation was 8%, which means the purchasing power of selling your home just went away by 8%, even though they were flat in your area. In my area, we're down about 10%. Add on another 8%. That puts us down about 18% right now, just in the last year or so. Now, if you bought bought your house in the last year or so, you're really kind of sad. You're cash poor because you're house poor. You don't have any cash because it's all in your house. You're trying to make the payment. You're hustling to make the payment. Uh-oh. They're having layoffs at your company now. Uh-oh, you're very nervous, because if you get laid off, you don't have a way to pay the mortgage. And right now, you don't want to be looking for a job. The jobs are going away, especially the high-paying ones. You can still get a job at Chipotle. You can go make some burritos, but that probably is not going to get your mortgage paid. It just doesn't work that way. You need a high-paying job. But right now, your company's laying off. Now, of course, in your area, no layoffs, no deaths, no divorce. And that's really cool. Everybody wants to move to your area. But my area is a little bit different. It's called reality, right? And in reality, we have death, we have divorce, we have job losses. And right now, we're down about 10% in my area. And there's a lot of job losses coming. I'm in Silicon Valley. Tech is still laying people off at record paces. They're losing their jobs. They're looking for other jobs, but companies aren't hiring right now. So they're having trouble making their mortgage payments. This is going to be forced selling. Going to be more houses coming onto the marketplace. But Mike, there's no inventory. And right now, I agree with you. That's why it's a good time to still get out. But when the inventory comes, that's a bad time because then it's too late. It becomes illiquid from the credit crunch of the banking system. The banking system running that Ponzi scheme. A lot of the banks are going to go out. 400, 500, 600 banks will go under. They'll call it mergers, right? They'll all merge with JP Morgan. JP Morgan merges with everybody. That's what they do. They're going to be the last bank standing. That's going to be JP Morgan and the central bank. That's going to be the only two, right? And they'll bring out the CBDC coin, central bank digital currency. Most evil thing I could imagine is a central bank digital currency. But that's just my take. That's a whole nother video. Anyways, today, get out to everybody, but first give me a thumbs up. Why not? Hey, it's my birthday today. Give me 2 thumbs up. Oh, I'll just give me 1. That's fine. Anyways, get out to everybody. Have a great day. We'll talk again later in the week. Bye-bye now.